Online and in person with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Understanding the Secure Act 2.0. Mike, one of the provisions in here allows individuals to actually move money from a 529 plan that was supposed to be used for college into a Roth IRA for the beneficiary of the 529. How does it work?
Yeah, so this has been a common concern for parents out there is what if I over-contribute to a 529 plan, then I've got a bunch of money stuck in this account that I really can't touch until maybe I have grandchildren or some other scenario. And the Secure Act 2.0 attempts to solve some of that here. They've already changed it so you can use it for secondary education such as private high school and things like that. But this is a specific provision that allows you to move money from a 529 plan to the beneficiary and in the form of a Roth IRA, so long as certain conditions are met. One, the account has to have been open for 15 years or longer. There's some limits to how much can be done in total over the lifetime, $35,000, and the traditional Roth IRA contribution limits do apply. So only one calendar year, $6,500. They must have earnings to be able to do so. But this is a significant change, and really, in my view at least, solves a lot of the problem and concern about overfunding a 529 plan.
Our guide this month is titled Understanding the Secure Act 2.0, and there are two ways that you can request it. The first is by calling 800-393-4001. The second way to request it is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com. Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's actually Chuck and Paul Lane and Tucker with you, and last week, not much economic data. This week, we're just getting slammed by it. It's a data deluge, if you will. And we've got a bunch to get through today, but let's kick things off with the retail sales data for the month of January, as it's called in the English language. Up 3% for the month versus expectations of up 1.8%. And stripping out autos, up 2.3% versus expectations of up 0.8%. Your interpretation, Paul Lane.
I think Tucker needs to cue up our new favorite sound signal here.
It's an old favorite.
Old favorite. Yeah, this report was incredibly hot, Chuck, in terms of spending data. You've got this on the heels of the jobs report that we saw for the month of January, where they added 517,000 jobs. Further evidence to support the fact that inflation is likely not being tamed as what we thought it once was, or not necessarily we, but just the markets in general. Very clear indicators here. Spending, particularly on the service side of things, continues to be very resilient, and the American consumer is getting out there and spending. We saw, specifically to the food and services piece, a 7.2% month-over-month increase in food services and drinking. So to that point, we saw it in the jobs report. Leisure and hospitality was one of the biggest sectors in terms of additions. The spending continues to pass through there. We also just saw across the board here, there are really no negatives, Chuck, in terms of spending.
No, there are no areas of this report that saw a monthly decrease in spending.
So it's just a very hot report. Really leads me to believe that we've got a lot of work to do to get inflation under control. And these rate projections of 5.1%, I feel we're going to look back and say that those were just incredibly conservative, just as conservative as what we saw last year with expectations.
Yeah, I want to go through just some of these details. Let's start with that food services and drinking places that you mentioned. Mm-hmm. So this falls into the food outside the home category. 7.2% in a month. Compared to January of 2022, so a year ago, up 25.2%.
Yeah.
That is a monster. Now, remember that retail sales data is not adjusted for inflation. So you say, okay, inflation's, been running, in food, 10% over the last year. It's still up 15% in real terms.
Right.
That is a monster number. Other things that I found interesting in this, department stores up 17.5% for the month. What does it say to me? Hey, a bunch of people wanted to take advantage of stuff that was on sale after Christmas. That's kind of what it says. People delayed purchasing with the idea that things might be cheaper after Christmas. This is the kind of weird behavior that inflation makes people do. They don't buy the thing and have it under the Christmas tree. Instead, they buy it afterwards. Weird behavioral changes. You look at just about everything. I mean, even furniture and home furnishing up 4.4% for the month. This was an area that was declining year over year prior to this. And everyone went out and bought couches. Everyone bought rugs. Everyone bought whatever else you can buy at a furniture store. Okay? Desks, tables, chairs. Oh my. It's all there. You look at clothing stores, up 2.5% for the month. Again, strong growth on that front. Motor vehicle parts and dealers. Again, we kind of stripped this out because it can be volatile. Matches what we saw in the auto sector, up 6% for the month. again, it's just across the board.
Electronics, too. That's an area where it's the only one you look year over year that's actually negative. But what have we heard from in terms of PC, tablet sales, all those other items, video games have been down for a long period of time. Even that month over month up 3.5%.
Maybe TVs are carrying the weight.
Yeah.
People buying VCRs or whatever they buy these days, you know? So you look at this, and here's the thing that you have to come back to. There is a 0.0% chance that the U.S. is in recession right now. None. Mm-hmm. I know there's been a lot of recession talk. There is no chance. Big goose egg. None. And it looks increasingly unlikely over the first half of this year now. Okay? Maybe you get one. I mean, again, the data can change over 6 to 12 months, so I don't think you rule one out for the back half of last year. But I've been harping on this since November now, that one of the main things that you could see this year is not the hard landing, not the soft landing, but instead this hard go-around where inflation never really cools as much as the Fed wants because spending starts to pick up again, not just domestically but overseas, and now you got to do a whole nother round of hikes. And this is where I think we're heading, and this is a really complacent market right now, Paul, in my opinion. Because even with the heat that we got on the inflation report, now the jobs report was hot, you got a market that's like, well, maybe it'll just come out really, everything will be fine. The soft landing will happen. This will be great. It's not happening that way.
I'm glad you mentioned that, because when I saw that jobs report data, I've mentioned this before, to me that was a real just moment of clarity that, gee, we are nowhere near as far along as people think in terms of cooling off inflation. And the markets didn't react as strongly as I would have thought, or didn't react as strongly as they had in the past year, where we would see those inflation reports and you'd see a 2 or 3% drop in terms of the markets the day of those reports coming out. Here we sit today, we're down about 0.7%. Same thing applied with that jobs report. Not days of tremendous volatility. It's so surprising.
And it's also, even on the rate side, coming into this year, the expectation was about 2.5 hikes. 2, maybe 3, okay? We're now up to projecting in 4 hikes, so, okay, we've seen a little bit of expansion there. But ultimately, if you've already hiked 5% basically to this point, just shy of it, is an extra 0.25% going to be, what does? I continue to think, the more that I look at this is a Fed that most likely, in my opinion, is going to have to get the Fed funds rate north of 6%, potentially well north of 6%, okay? Because ultimately, is the Fed the perfect tool for this? No, but this is the tool we use, so we have to talk about it in this context. If you're trying to slow the economy and reduce demand, 2 ways that you can do it. Number one, hey, make more attractive options for savers, okay? If you get 1-year CDs that are paying you 6.5%, gee, maybe I'll do that instead of, spending the money or investing it in the stock market or something. The other way is, hey, if interest rates go up to borrow, great, you can't do as much as you could previously. But economies and people, they adapt. So, yes, when interest rates first went up to 6.25%, people said, oh my goodness, how are we going to ever do this? And it's still really expensive. Then they went to 7.5%, and people were 7.25%, and people were like, oh, it's 7.25%, that's even worse. Mm-hmm. Now rates came back down to 6.25%, and people are like, well, that's not half bad. We could deal with that.
Right.
And so I continue to look at this and say, it's really hard to ruin the housing market in back-to-back years. If you're already starting to see an acceleration in terms of transaction volume on housing because people in markets have adjusted and this and that, and even though I might think the prices are crazy and unaffordable, it's not up to me. It's up to what people as a whole are saying. Hey, if they're acting with their feet and saying we're going to buy homes with mortgages at 6.25%, then how does the Fed ruin that 2 years in a row? You can't just raise rates by another 0.5% and say, well, maybe this will do it.
The quarter basis points, it really just it doesn't seem like it's not going to move the needle at this point. 5 or 5.1 as they've projected. How does that really change our day-to-day? What impact does that have on the consumer, whether it's your HELOC, your credit card debt, auto, companies borrowing? That's just not enough to slow things down.
There are 2 things, in my opinion, that Jay Powell and the Fed need to do at the next Fed meeting. in order to regain control over the inflation story, because they're in danger of losing it again. They had a transitory period, if you will, of about 3 or 4 months where it looked like they were getting it under control, but they're in danger of losing it again. So if I were Jay Powell, and I wake up each morning and I thank God each and every day that I'm not, okay?
Oh, yeah.
But if I were, here's what I would do. March 22nd, I'm hiking by 50 basis points, not 25. I'm going out in my press conference and saying, you're not pricing this in. We're proving that we're taking this seriously and that this reacceleration is not going to lead to another round of inflation. The second thing I do is in March, the Fed also releases their Summary of Economic Projections, the SEP as it's known. And that's where they put out their dot plot about their projections of where interest rates will be later this year and next year in the long term. What I would do, right now the long-term rate has been priced at 2.5, okay? And that's where the Fed's basically had it since 2019. I would raise that long-term projection to 3 to 3.25, saying, guys, we're not getting back to 2.5. So anyone who thinks that we're trying to get back there, no. If you want to be really aggressive, raise to 3.5 or 4, and then see what happens. But I think that would be a little chaotic for markets because, again, the Fed doesn't directly control long-term rates, but with their communication, they try to influence it. So I would go 50 basis points in March and say, guys, we've seen a reacceleration.
We're not messing
This
around.
warrants more action than what you're pricing in right now, and we're going to go. You see it all the time in emerging markets where, again, different situation, but you're sitting there in Argentina. Oh, inflation's out of control. What do we have to do? Central bank comes in and slaps down investors and says, get it together. We're hiking. We're in control. You have to do it in the U.S. right now. Because otherwise, there's a real danger that you got to take Fed funds rate, 6.5%, 7.5%. And look, from a personal perspective, if I could go out and put my money in a 1-year CD paying me 7%, sounds kind of fun. I don't need to take any of the equity risk of the stock market to get 7%. Golly gee willikers, that sounds great.
Very concerning from a market perspective. To your point, just because of the mass exodus that you might see.
Well, and the other piece is it makes whatever landing you're trying to get to, it makes it that much harder because there's more danger of the Fed breaking stuff in a worse way the higher and faster they have to hike. If the long end of the curve had just stayed at 4% on the 10-year, you'd probably be, actually have a chance at your soft landing. Because mortgages would have stayed at 7, no one would have just started piling back in the second they came back down to 6. And you would have probably been okay. Instead, everyone wanted to front-run the Fed cutting, and it's just going to make it that much harder, in my opinion. Let's take a quick break here. When we come back, let's talk a little bit about China in the U.S. China warning about some retaliation after the U.S. has been shooting down balloons left and right. It's coming up after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
The Secure Act became law in 2019, but a new bill has updated some key areas. As of January 1st of this year, it's time to take another look at how these changes may affect your financial situation. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And whether it's the new age for required minimum distributions, how RMDs are affected if you have a Roth 401k account, or changes to catch-up contributions to any employer-sponsored retirement plan, we have a brand new guide called Understanding the Secure Act 2.0. This guide provides important information as to how any or all of these issues may affect your personal financial strategy. Call us right now at 800-393-4001 and request your free guide today. Or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates in your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
So that's a great question because there are two ways to create them. One in which you indicated transferring the remainder interest to your children, and the other is transferring the remainder interest to the irrevocable trust that we talk about. When you give it to the children, you've done just that. You've made a completed gift to the child. You could have a gift tax consequence associated with it. You don't really control it anymore. You can't sell it without their permission. You could have adverse income tax consequences when you go to sell it because, after all, the kids don't live there, and they wouldn't get the capital gains tax exclusion associated with selling the property. Plus, you might not get the proceeds back, or at least not all of them, if you needed to buy another house. Folks, the better way to do this is to transfer the property to an irrevocable trust and reserve a life estate when you're going to do it. And there's not all the times that we think you should reserve a life estate. They should be done only sporadically. It's not the best way to go. But they do work, folks. They do work.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan, Calculating the Consequences of a Life Estate. You can call the phone number 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, the guide's called Calculating the Consequences of a Life Estate, 866-848-5699, or you can request it at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. And right now, you can take advantage of a great promotion if you travel to St. Croix. Book any hotel for a minimum of 5 nights and receive at least a 10% discount on your stay, as well as a $200 air credit per person, ages 16 and up. Use the code VIBE2023 when booking. Come to America's Caribbean Paradise. Go to visitusvi.com for more details and to book your trip. That's visitusvi.com.
China warning that it will retaliate against the U.S. over violations of its sovereignty. The quote from one of their foreign ministers says, quote, China is strongly opposed to this and will take countermeasures against relevant U.S. entities that have undermined our sovereignty and security to firmly safeguard our sovereignty and legitimate rights and interests. Your thoughts, Paul?
A lot of posturing, a lot of sort of each side taking a hard stance, but to me, I don't feel as if we'll see any imminent action. I think that there's other things that these countries are focused on at the moment, whether it be China's reopening, domestically here, inflation problems. So it seems like they're sort of trying to gradually sweep this under the rug. I hope that we don't see any dramatic action on either side here.
So apparently Beijing is saying that the U.S. had 10 different balloons that traveled over China since May of last year. What's with all the freaking balloons, man?
It blows me away that that's what we're breaking down.
Like, what's with all the freaking balloons?
They're very concerned about weather.
You know, it's just a little wild here. So the question is, okay, if the U.S. floats a balloon over China, is it going to get shot down? The answer in my mind is probably. Mm-hmm. You know, it's kind of what they're signaling is, hey, stop sending balloons over us, maybe. But the piece that I've come back to on this all along is with the domestic politics in each of the respective countries, there is no incentive for any de-escalation here. There's no incentive for, well, we want to reach out and try to work with each other, in order to, it's stop sending stuff over my air. That's and I'm not saying that message is right or wrong, but just it's what we're getting, and it points to further escalations in the future in my mind, whether you're talking economically or, militarily. I'm not saying imminent war is out there. That's not what I'm saying at all, but more that there's no attempt by either side to really de-escalate the situation.
Skies are a scary place right now. There's a lot going on. Balloons,
UFOs.
Yep. UFOs.
Tucker, any word yet on whether or not the little green men are pouring out?
No official word yet, but it can't be ruled out.
Okay. I'm sticking with my 15% probability of aliens.
Oh, is that what you said? I was out on Monday.
Yeah, that's what I said on Monday.
15, huh?
I went through the 7 options. It was my third most likely option.
What were the first 2?
40% chance just that there have been a bunch of, things being flying over us before from other countries, and because they're slow speed, we haven't paid attention, and now we're finally paying attention because the balloon got so much news. It was a 25% chance that this was, further escalations from China trying to send more stuff our way.
Got it.
So, again, the bulk of what I'm saying is not aliens. But anytime you hear there's an octagon floating in the sky and we don't know how it's powered, the mind goes to aliens.
I mean, how can it not?
So I maintain that, and we'll see. I think hopefully we should learn more in the next couple days at least. But I don't know. The counterpoint to it is aliens decide to make landfall right on Earth, and they go to Lake Michigan. Like, what's going on there? You know?
I don't know.
I just that's
taking a hockey game.
Yeah, that makes me feel like maybe it's not aliens.
Probably not.
It's probably not. But you always got to be ready.
I have to say I've been a huge alien skeptic, but I'm in the 15. I can get by with the 15% camp a little bit more. If you'd asked me this a year or two ago, I would have been at 0.
Yeah, it's out there as a possibility. And what would it mean for us economically? Interstellar trade. Maybe that's, the next frontier, right?
That'll get us out of this next rut here.
Maybe that helps with inflation. Or would interstellar trade increasing be inflationary or deflationary?
Boy.
There's a lot to unpack there.
That's a Mark Vendetti question.
We could do a whole show on that and see what happens, but I don't think there's a definitive answer. What do you got, Tuck?
Did you hear Vendetti yesterday?
No, what'd he say?
You go back and listen. Oh, it was amazing.
What was the topic?
He was pretty much just bashing Jay Powell. It was tremendous.
Oh, well, yeah. I mean,
it was all about the inflation report yesterday. But, yeah, if anybody has not heard it, go back and listen to our podcast.
It was that good?
Yes.
I'm going to go listen to it now.
It was amazing.
I'm going to go listen to it now. Let's see. Lawmakers sparring over Social Security. Nothing's going to happen. It's not. I'm sorry. It's not going to get cut. Okay. Because, you're never going to actually have the votes to cut Social Security. It's not going to be fixed because if it gets fixed, then you don't have this football that you can campaign on. And so we're going to get to 2033. The trust fund is going to run out of money, and they're going to put some provisions in place so that, people on it don't get an immediate 20% cut, and then they'll have to fix it then is where my prediction is.
I had more on some of the budgetary aspects, but I'm with you on the Social Security.
It's never going to get fixed until it actually breaks.
But where do we cut from?
Well, I don't know. Let's take a quick break. When we come back, it's Wall Street Watch and Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 or request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Understanding the Secure Act 2.0. Mike, one of the provisions in here allows individuals to actually move money from a 529 plan that was supposed to be used for college into a Roth IRA for the beneficiary of the 529. How does it work?
Yeah, so this has been a common concern for parents out there is what if I over-contribute to a 529 plan, then I've got a bunch of money stuck in this account that I really can't touch until maybe I have grandchildren or some other scenario. And the Secure Act 2.0 attempts to solve some of that here. They've already changed it so you can use it for secondary education such as private high school and things like that. But this is a specific provision that allows you to move money from a 529 plan to the beneficiary in the form of a Roth IRA, so long as certain conditions are met. One, the account has to have been open for 15 years or longer. There's some limits to how much can be done in total over the lifetime, $35,000, and the traditional Roth IRA contribution limits do apply. So only one calendar year, $6,500. They must have earnings to be able to do so. But this is a significant change, and really, in my view at least, solves a lot of the problem and concern about overfunding a 529 plan.
Our guide this month is titled Understanding the Secure Act 2.0, and there are two ways that you can request it. The first is by calling 800-393-4001. The second way to request it is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Time now for Wall Street Watch here on the Financial Exchange, and markets are in negative territory, although not as bad as traders react to January's retail sales data released this morning, which showed a 3% jump in January, well above forecasts of 2% despite inflation. Right now, the Dow is off by 1/3% or 119 points. S&P 500 is also off by about 1/3% or 14 points. And the NASDAQ is down by 17 points. Russell 2000 also off by about 0.25%. 10-year Treasury yield, that is up by 1 basis point at 3.78% now. And crude oil is off by 0.75%, trading at $78.47 a barrel. Shares in Kraft Heinz are jumping about 1% after the food and beverage company said its fourth quarter earnings came in above forecasts. However, the company said earnings for this fiscal year would be between $2.67 and $2.75 a share, below forecasts of $2.77 a share. Meanwhile, Roblox revealed it generated $579 million in fourth quarter revenue, up 2% year over year. The online gaming company that owns games including Jailbreak and Meep City said its bookings, which is generated from in-game purchases, were up 17% to $899.4 million, above forecasts of $881.4 million bookings. That stock is surging 25% so far today. Needham Mass-based TripAdvisor stock is jumping 3% after the online travel company revealed fourth quarter earnings, revenue, and cash flow above estimates. And Generac shares are up 10.5% after the power generator producer reported mixed quarterly results, beating earnings expectations but falling just short of revenue forecasts. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are joined now by Todd Lutsky from the law firm of Cushing & Dolan for Ask Todd. It's your chance to ask Todd your questions about your estate plan. So, if you've got a question for Todd about estate planning, the studio number here is 888-205-2263. That's the number to call to ask Todd your question right here on the air. Again, that number is 888-205-2263. Last week, I know we left at least one person hanging and couldn't get to their question. So if you do have one, get calling early to get in line. Again, it's 888-205-2263. Mr. Lutsky, how are you today?
I am never better. How are you?
Doing well. Do you know that I used to be in a band called the Dead Squirrels?
No, I didn't know you even played music.
I did. We played a lot of middle-of-the-road stuff.
Of course you did.
Yeah. Not in it anymore, obviously. Let's talk a little bit about life estates. Can you put a life estate on multiple properties?
You know, folks, there's no real limit to doing it, but the answer is you probably should not.
How come?
Put a life estate on multiple properties, because the main reason people do life estates is to try to protect it from the nursing home. They think it's a quick fix to protect assets from the nursing home. And it would accomplish that. I mean, ultimately, after 5 years, it would be protected from the cost of long-term care. Again, pros and cons. But when you do it, you keep this thing called a life estate. This thing is a property right, and it's your right to live there, and it's your right to the income, and, of course, you get to pay the bills. That's what you get. And the remainder piece is what you give to the children, or you give to an irrevocable trust when you create the life estate. That's the two ways to do it. Well, you do that because when you get sick and go in a nursing home more than 5 years after you do this, then that piece that's a life estate in your primary residence is an asset because you still own it. But since it's your primary residence, it's non-countable for Medicaid eligibility purposes. Beautiful. That's why we do it. Let's flip that to your question, Chuck. What if I had a rental property and I took it and gave it to the kids or put it in a trust and reserved
or
the
even
life
a second
estate.
home that I use for the summer or the winter or something like that.
Yeah, correct. Or a vacation home, and I just throw it into the kid's name, and I keep a right to live there. Well, now if I get sick 5 years later, I have a right to live, a property right in my name in another piece of property that is not my primary residence. So therefore, the value of that right, that property right, is going to cause me to be ineligible for Medicaid because it's just an asset that is not the primary residence. Remember, it's the primary residence that provides that added level of protection.
So if someone were concerned about protecting assets from the cost of long-term care, is there a reason why they would or should choose a life estate over an irrevocable Medicaid trust?
Yeah, one of the reasons I would do, and it's not over, by the way, not in
conjunction?
in lieu of. Yeah,
Yeah.
I would do it in conjunction with. Is I would keep a life estate. One of the reasons I would keep a life estate for people is I would have them put the remainder interest never in the hands of the kids, but in the hands or the entity of the trust. That's fine. And if they keep a life interest, let's say it is a rental property, Chuck, that way the rent can come directly to them and not flow through the trust. So for convenience, that's nice. I don't have to flow anything through the trust if I have a life estate.
Okay.
So I might keep a life estate in that, but only if it's a two-family. It can't just be a separate rental. If it's a separate rental, again, I blow the problem with that. Right?
Gotcha.
If it's a two-family, I'm living in the upstairs and I'm renting the downstairs, now I can keep a life estate. But if it's just a pure rental, I would not do that.
What if it's just a primary residence, no rental income or anything like that?
I'd probably only keep a life estate if I had an outstanding mortgage. Sometimes people that are doing Medicaid planning still have a mortgage. I would reserve the life estate so as not to trigger the due on sale clause on the mortgage. That would be the only time I would do it. Otherwise, I'd put the whole house in the IRREV trust.
We're speaking with Todd Lutsky from the law firm of Cushing & Dolan. If you have a question for Todd about your estate plan, this is the time to call so you can speak with him about your specific estate plan. That number here is 888-205-2263. That's our studio line here. Again, it's 888-205-2263. We're going to take a quick break, but when we come back, it's right to your calls.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues, such as losing control of your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan.
Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Secure Act became law in 2019, but a new bill has updated some key areas. As of January 1st of this year, it's time to take another look at how these changes may affect your financial situation. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And whether it's the new age for required minimum distributions, how RMDs are affected if you have a Roth 401k account, or changes to catch-up contributions to any employer-sponsored retirement plan, we have a brand new guide called Understanding the Secure Act 2.0. This guide provides important information as to how any or all of these issues may affect your personal financial strategy. Call us right now at 800-393-4001 and request your free guide today, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, as promised, we're going right to your calls. If you do want to speak with Todd Lutsky right now, call 888-205-2263. Let's go first to Robert in Malden. You're on with Todd Lutsky.
Hi, Todd. Good morning, and good morning, Chuck, and all at the show. Todd, I have a question for you. I have a annuity, which is an IRA annuity. There's about almost $500,000 in there. And I was wondering, is it possible to put that annuity in a trust to protect it from a nursing home cost or anything like that?
Yeah. So unfortunately, it's not the fact so much that it's in an annuity; it's that you said it's an IRA annuity. So
yes,
if it's inside an IRA, folks, anytime you have an IRA, what it's invested in isn't important. The important part is that it's an IRA. And IRAs cannot go into irrevocable trusts or revocable trusts for that matter while you're living, because in order for it to happen, you would have to take the money out of the IRA, and that, of course, is a big taxable event. So we don't want to incur a huge $500,000 worth of income in 1 year by taking the money out and putting it into the irrevocable trust, because I'm going to lose 30 or 40% probably between federal and state. So unfortunately, Robert, the answer is no. You can't do it in advance. It is possible to, if you're married and you set up irrevocable testamentary trusts, it is possible that if you don't go into a nursing home but end up passing away and you're over 73 years of age, the estate can be named the beneficiary, and then it can be protected in advance if the spouse was to get sick. A little more complicated, I know, than maybe you were calling for, and it's tough on the radio, but that's the quick answer to your question. So, folks, just wanted to give you a shout out on life estates, because we were talking about that earlier. And life estates are something that everybody uses. You hear them all the time. They're thrown around, as the simplest way to protect assets from the nursing home. Remember, simple isn't always better. So in this case, learn about life estates, learn how they work, understand that you may or may not be able to sell it the way you thought. It's exposed to children's creditors. You may not have the income tax benefits you think you're getting. So learn about the pros and cons, and maybe you might want to learn about how to undo one if you're already in one. Calculating the Consequences of a Life Estate is the guide we're giving away this month. 866-848-5699 or legalexchangeshow.com. You can download it right there. Again, 866-848-5699 or legalexchangeshow.com.
Again, sticking with your calls here, let's go to Steve in New Hampshire. You are on with Todd Lutsky.
Good morning, Mr. Lutsky. I have a question concerning a SEP IRA account.
Okay.
The value is approximately about $2 million.
Mm-hmm.
I'm my age now. I'm at 65,
Mm-hmm.
and I'm concerned about the required minimum distribution. So at this point, I believe it's 73 that I would have to start drawing off the account.
That is correct.
So to switch over to a Roth,
Mm-hmm.
I think that to bring down the number, I'm going to get hit pretty heavy on the tax on that conversion at this point.
Correct.
So am I better off trying to take money out of the account and drawing down those funds, not take Social Security next year at 66.5, and just trying to reduce that amount from the $2 million and just actually putting it into a brokerage account, just take, and get hit with the income that'll come off of the SEP.
The question is, do you want to convert to a Roth, are you asking, basically?
Well, I think that if I convert to a Roth, I think that I can't convert enough of it, in my mind, to make sense.
Well, let me help you with your question is, what do you do with the IRA? What do you do with? So what is your question then? What do I do with the IRA? Do I take money out or?
Yes, my question is, does it make sense to take, let's just say, $50,000 a year for the next 6 years or so, trying to reduce what's in the IRA, pay the tax on that as income.
So let me ask you this.
Yeah.
How many? Do you have children?
Yes.
How many children?
Two children.
And are they doing okay in life?
They are.
Okay, great. So here's the issue, right? I'm going to just, in the time I have left, I'll give you what I think is an answer to your question. So, folks, when you have a $2.0 million IRA, right, it's a large number, right? If we don't spend that during our life, which is my advice to clients when we're doing estate planning, right? Take that and spend it during life first before I spend all my other money, right? Because that money, if I try not to spend it, right, then I end up leaving $2 million to my children. Well, my children under the Secure Act have to take it out over 10 years. Well, with $2 million, right, a million each, let's say, they're going to be taking out well over $100,000 a year because they have to take it out over 10 years. So they're going to be bumped into a higher bracket, especially if they're earning money in their own right. So it's ultimately going to be income taxed higher than perhaps it'll be taxed when you take it out if you work to leave it to your children. So I don't love that approach. The flip side is, as Steve is saying, well, I don't want to take it all out now because I'm going to have a 40% haircut. Correct. But look at your brackets every year. Steve, you know where you are in your income tax world. You know what kind of income you're making. And this is for everybody. Like, look at where you are in your income tax bracket world and see how much you can take out before you go to the next bracket, right? You might find that you can take out 50, 60, 70, maybe even more per year and not bump yourself into the next higher bracket. Well, if that's the case, yes, I recommend taking it out. I recommend spending some of it if you can spend it. And to the extent you don't spend it, you have choices of either investing it directly into a brokerage account. And again, if you want to do planning and you're talking about nursing homes and the like, putting it into an irrevocable trust might be okay. Or converting it to a Roth and letting it grow, income tax free in that Roth. So it's a function of how much you take out and how slowly you take it out. You can manage your income tax hit and then spend other money first. But again, I think there's a lot more involved here for someone like Steve or anyone that's got a $2 million IRA. I suspect there's a lot of other money. There's probably, or not money, but other assets that Steve might have. So you want to look into an entire estate plan, folks, not just one asset, and see what you can do for all the other assets as well in conjunction with an IRA. But, you know, Chuck, overall, the IRAs are one of the more complicated assets to deal with. I like to tell people that an IRA is that square peg that you try to fit in the round estate planning hole, and it doesn't really always fit. So tough asset to deal with, but good question, Steve.
Todd Lutsky, thank you so much for joining us today. We appreciate it.
Always a pleasure.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues such as losing control of your estate. So, call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com.
Still a lot to come as we get towards the second hour of the Financial Exchange. Berkshire Hathaway, they're letting us know, hey, what are they buying inside their portfolio? So we'll fill you in on any changes going on there. Also, we talked about this a little bit on Monday, I believe, in terms of EVs and where are you going to charge them. Some information on Tesla chargers that I think will be interesting and of note there. And then also, Apple, they are rolling out their own buy now, pay later service. We'll talk about whether or not it makes sense for them and how they are going to try to manage that risk. Quick break now. Hour 2 coming up in a little bit.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, who should consider reserving a life estate for their primary residence?
So because of the one problem associated with life estates, and that is that when you sell it, you get a portion of the assets back, which could make it at risk for the nursing home again if you do sell it during your life. Because of that, I think the only time you should use this is, one, if you are in a two-family home and you're renting it. That way the rent comes directly to you because as a life tenant, you're entitled to the income from the property. Two, you might be getting one of those VA benefits, or in your particular town, you might get a real estate tax abatement. If you get the real estate tax abatement, you need to reserve the life estate in order to preserve that real estate tax abatement. And the third reason you would reserve a life estate is when you have a mortgage, right? A lot of people don't think they can do irrevocable trusts if they have a mortgage on their property. Well, you can, but when you transfer the property to the irrevocable trust, you need to reserve the life estate so as not to trigger the due on sale clause on your mortgage. This way you can keep your mortgage and still do your Medicaid estate planning.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and of course protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can call 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, 866-848-5699, or request the guide online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands, because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide out this month titled Understanding the Secure Act 2.0. Mike, one of the big changes in the Secure Act 2.0 is that RMD ages are on the move again. What's happening with them?
They are. So this kind of slipped under the radar last second at the end of last year, so it hasn't got as much attention outside of certain circles. But previously, RMD age was 70 and a half. It got moved back a few years ago to 72. Now they're moving it again. So for those born between 1951 and 1959, your new required minimum distribution age is 73. If you were born 1960 or later, you're now moving to an age 75 for required minimum distribution, which creates a whole bunch of new opportunities that weren't previously available.
Yeah, and certainly when you look at this, it gives you the ability to adjust and manage your tax burden longer into your retirement, potentially employing things like Roth IRA conversions for additional years than previously was allowed.
It does, yeah. So Roth IRA conversions have been a big topic in financial planning for the last few years, and effectively this just gives you more flexibility when it comes to those. Other changes regarding RMDs, you used to need to take one on a Roth 401k account. They did away with that entirely. So a lot of changes in this new bill, and we cover all of them in our new guide on Secure Act 2.0.
The guide is titled Understanding the Secure Act 2.0, and there are two ways to request it. First, you can call 800-393-4001, or you can request it online at armstrongadvisory.com. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Paul Lane, and Tucker with you, and we've got a mild sell-off happening today. The Dow's off 130 points. S&P's down 15, NASDAQ down 20, so anywhere from about 1/4 to 1/3% sell-off. Bonds selling off as well. On the back of that hot retail sales report, 10-year Treasury in the United States is up to 3.79%. Oil, West Texas Intermediate, down about $1.02 to 78.04 on a jump in inventories. And gold getting whacked for the last couple of weeks, down $21.10 an ounce to $18.44 now, $18.44.30 rather, on the back of higher real interest rates. Paul, let's talk about Social Security. How do we fix it?
Oh, boy. I was hoping we'd get to the other aspects of this. Is where else do you cut from a budgetary perspective? How do you fix Social Security? To me, the idea of pushing back the retirement age is one that's a pretty quick fix. But in terms of funding, unfortunately, it's not a popular idea. But I just don't know how you don't at some point, with the longevity that people are reaching plus inflationary pressure, have to either raise tax revenue or you have to cut from higher earning benefits. I don't see a solution that doesn't involve a little bit of pain to us in the future.
Well, there's obviously going to be, some pain, but I will tell you, I have a personal plan to fix Social Security. Would you like me to tell you how to do it?
Sure. Lay it out.
First, the retirement age. It's currently age 67.
Yes.
Okay, the full retirement age for Social Security. I'm going to index that to longevity from now on. So as we get older,
Right.
you'll gradually see, okay, whenever, the longevity of Americans ticks up by 1/10 of a year, great, this will tick up to 67 and, a month or something like that. Okay, and so on and so forth. According to the Committee for a Responsible Federal Budget, the CRFB, if you will, they have a tool called the Social Security Reformer that's going to cover about 20% of Social Security's gap that it currently has.
Okay.
The next thing I'm going to do, I'm going to subject all wages to payroll tax, not just the first 170,000 as it is for this year. Okay? So right now, if you earn more than 165 or 170 or whatever it is,
Yep.
you don't pay Social Security tax on that.
Right.
I'm going to do it for everything. You earn income, all of it's going to be subject to payroll tax. Okay, at least if you earn it through, payrolls. Okay? So that means that Jamie Dimon and his $25 million salary got to pay Social Security tax on the whole bit. Okay? Sorry, Jamie. This is how we do it. Okay? That makes up 63% of the difference just by doing that. So
But he doesn't get a higher benefit?
Nope. Sorry, Jamie doesn't need Social Security.
You're talking about Jamie, but I'm thinking about the people at 225, 250, etc.
Are we really going to worry about them, Paul? Let's be honest here. When we talk about what Social Security is actually supposed to be, it's not supposed to be, and I know this is for a lot of people, it's not supposed to be the only thing that you get for retirement. There are a bunch of people where it is the only thing they get because they don't make a lot during their careers, they can't save, and so Social Security is the only thing they have. It's important that, you don't have a bunch of poor, retired people who are, again, think about what it does to society if you can't retire and you have no income. It's not good. You don't want that. For Jamie Dimon, doesn't matter. And honestly, for the person who's making $200,000 to $250,000 a year, they'll figure it out anyways, okay? If they have to pay more, if they have to pay Social Security tax on that extra $80,000, they have enough there to figure it out, okay?
So we're up to 83%.
And then I'm going to calculate the benefits based on the highest 38 years of work experience rather than the highest 35.
How does that impact the difference?
Fixes 8% of it.
Okay.
I'm up to 91% of the shortfall closed, and for 92% of Americans, I haven't changed taxes. I raised it on the top 8% that are above that 160. Okay. I have not cut benefits, and the retirement age, it's only going to go up if Americans live longer. That's pretty darn good, so I'm going to pat myself on the back. Paul doesn't like the fact that I'm raising the tax on people making above 160. Paul's like, this doesn't feel good to me. I'm like, I'm sorry. And here's the other thing that you got to remember. This is only on payroll. If you're earning this through capital gains or anything else like that, if you're earning it through rental property income, you're not paying this.
It's a whole lot easier to push through than the idea of cutting benefits for all retirees or making sweeping changes to the program.
If Jamie Dimon's got to pay a little bit more, you want to do the donut hole approach? Fine. Hollow it out and take, I forget who it was who proposed this. Maybe it was Joe Manchin. Maybe it was someone else. Okay, don't raise it, the payroll tax on people right above 160. Do it above 400,000.
That's the number I saw. Yeah.
That clears up 45% of the gap instead of 63. Now I've cleaned up 75% of the shortfall. Still pretty darn good.
Right.
Okay. And again, on that, you're only really raising taxes on the top 2% there. And it's just saying you're going to pay the same rate that everyone else is paying on Social Security. So that's how I would personally fix it, by not cutting benefits, not raising taxes on basically anyone, and by just indexing the full retirement age to only if you see longevity increases in the U.S. What we do have, though, unfortunately, is this problem where Social Security is going to see its trust fund empty somewhere in the next 10 to 11 years is basically what the math is showing now. And at that point, anyone, if nothing were to change, anyone who's currently collecting would see an immediate drop of about 20% in their benefit. So what are lawmakers actually talking about doing now? Are they talking about anything meaningful, Paul?
Nothing incredibly meaningful. The idea has been kicked around about the retirement age. We talked about that before. Also talking about the idea of potentially changing the payroll taxes. I don't think that really has gained a lot of headway here. But to me, I read this back and forth, and it's just a lot of posturing between the two sides. Nothing really concrete has been presented. It seems like something to me, Chuck, that is just going to get kicked down the road further and further to the point where they just get right to the precipice and then they start making changes.
The thing is, and again, this is from this article from the New York Times, there's the outline of a potential solution here. I'm going to quote from it. Influential Republicans have proposed a variety of changes to make both programs more fiscally sustainable, both referring to Social Security and Medicare. Medicare, honestly, let's spell it out. Medicare's screwed. Whole different problem.
Yep.
Way worse than Social Security.
Right.
Including spending cuts and gradually raising the retirement age from 67 to keep up with longer life expectancies. Okay, House Republicans like my idea to gradually raise that retirement age from 67. Good, we got that one. Joe Biden has suggested eliminating the cap for incomes above $400,000 a year. Good, we got that one. Let's just put those two together and we'll cover like 60% of the shortfall just on those items.
Right.
No one gets everything they want. No one's happy with everything. But you're solving 60% of the problem.
This is the definition of a good compromise or a good deal.
A good compromise is where everyone goes home unhappy.
Right. Right.
No one feels like they got what they wanted. That's what you want in a good compromise. Everyone goes home thinking they got screwed.
Exactly.
So this is where we stand as of right now. I've been talking about Social Security and trying to fix it, probably going back. I mean, again, there have been solutions proposed for decades now. The problem that you get to is the closer you get to 2033 or 2034, whenever you think it's actually going to run out of money, the bigger the changes are that you have to make. I mean, you could have done this stuff 15 years ago, and it would have been minor tweaks around the edges.
Right. Right.
Now you're going to be, you get out 8 more years here, and it's like, well, it's going to be a little bit harder to fix.
Particularly on the heels of an 8.7% increase due to inflation. If we continue to see inflation persist out further in 23 and 24, only exacerbates things.
Let's take a quick break here. When we come back, we've got trivia, and we're talking about what Berkshire Hathaway is adding to its portfolio.
For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword ENCORE. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
If you're closing in on retirement, pay close attention to the new changes in the Secure Act that was previously passed in spring of 2019. This is Mike Armstrong from the Armstrong Advisory Group. The original Secure Act revised the rules that govern retirement savings, and our new guide, called Understanding the Secure Act 2.0, addresses these changes in order to help you determine how your financial situation may be impacted. One key change involves Roth 401k accounts. Beginning in 2024, RMDs are no longer required from these. The biggest benefit of a Roth account is that any growth won't be taxed, so this change could help you if you have a Roth 401k. To learn more, call our office right now at 800-393-4001 and request a copy of this new guide. That number again is 800-393-4001, or you can request a copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for 2 to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands, because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 or request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES. Well, it's time for trivia here on the Financial Exchange, which is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Well, it was this week in 2005, specifically February 14th, 2005, YouTube.com was officially launched. The first YouTube video, titled Me at the Zoo, was uploaded on April 23rd, 2005, and shows co-founder Jawad Karim at the San Diego Zoo, and currently has over 120 million views and almost 5 million likes. So our question today is in relation to YouTube, obviously. So our question today is, what is the most viewed video on the Financial Exchange channel on YouTube? Once again, what is the most viewed video on our page, the Financial Exchange channel on YouTube? That launched back in December, mind you. If you are the second correct person with that answer, it's 617-362-1385. With that correct answer, you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give away that Encore gift card on Friday's show. Once again, 617-362-1385, and the second correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Berkshire Hathaway has to file a 13F report as part of being a large institutional investor managing more than $100 million. And the nice thing about Berkshire filing a 13F is we get to see, hey, what's Mr. Buffett holding? What are they doing out there in Omaha? And what did we learn this time, Paul?
Chuck, what happened here, we saw they added to their position in Apple. It's one of their top holdings, I believe, if not the top holding, but certainly in the top 5. They also decreased their market share, the amount of shares they held. This one in particular was of interest to me, Taiwan Semiconductor. They reduced their exposure there by about 86%. And that was interesting to me because it was an investment that was added in the third quarter of last year. So a pretty quick divestiture there. To me, Taiwan Semiconductor is a company that has a tremendous advantage in the semiconductor manufacturing process. They have such a strong foothold. While semiconductor demand may be have peaked or be slowing down, it's something that is not going to go away. So a little surprised to see that move from Berkshire Hathaway. Other than that, they trimmed some positions in U.S. Bancorp and Paramount Global. But the Taiwan Semiconductor manufacturing one, that to me stood out the most.
Yeah, again, I think that one is unique in the respect that Buffett is typically, and again, I know he's not necessarily the one making these moves at this point. He's handed off a lot of responsibility in recent years. But it's rare to see such a quick pivot from Berkshire, and I do wonder, if it suggests that the guys who are going to be taking over, have a little bit of a different view in terms of how they are looking to do things. I would be lying if I said I've looked at every 13F that Berkshire's ever filed to see how common this is going back, but it seems a little bit out of character, and so, I get the idea that, hey, maybe they're going to be doing things a little bit differently, and you just wonder about that.
The spending that they had last year, they spent $66 billion in adding to their stock portfolio over the first 9 months, 13 times more than what they spent in 21. Also, just interesting to note that as well.
AirBnB, they reported their earnings, more commonly known as Airbnb, and the stock today is up about 13% after they reported their first ever annual profit for the full year. And in fact, they lost $352 million in the prior year, but made $1.9 billion in profit in 2022. Fourth quarter profit also came in at $319 million versus expectations of $171 million. And so Airbnb stock is soaring today on that news.
Up 12.5% on that news. Really just speaks to the broader travel market in general. We covered earlier in the show the retail sales spending data, where we're continuing to see a lot of spending on food and services, but also in the travel capacity as well. You're seeing these numbers where summer bookings are up. We saw the world's biggest tour operator bookings for summer up 20% from a year ago. Really speaks to the strength in the travel sector. While Americans may be feeling the inflationary impact on their wallet, it still seems like savings are being burnt through or being allocated to these types of travel trips, Chuck.
Yeah, I think what I am going to be curious about is there seems to be a little bit of Airbnb backlash that's building, specifically around two things. The first is the laundry list of cleanup items that some hosts are leaving travelers with, where it's like, do one load of laundry, then do another. Take out this trash, take out that trash, mop this floor. It's like, and then you get slapped with a $200 cleaning fee, and you're like, what am I doing here? It's not my responsibility to make a quick turnaround for you to be able to rent the place out again 2 hours later.
Right. That's built into your cost of renting out a place.
Right. If I were to go and stay at a hotel, they tell me, check out at this time, and then I can leave the towels wherever the heck I want. And their cleaning staff comes through and cleans the place. If you want me to stay at an Airbnb and you're worried about how quickly you can turn the place, move the checkout up by 2 hours. Oh, but then we'll have to pay our cleaning person more. Fine, pay your cleaning person more. Like right. When I finish up with a vacation, the last thing I want to do is mow the lawn at the vacation property. So I think that's building a little bit. And then also what Airbnb, I do think they made a step to address this. They are incorporating that cleaning fee now into their projections of what the place costs. Because a lot of times you'll say, oh, this place is, $100 a night and I'm staying there for 3 nights. And then it's got a $200 cleaning fee and you're sitting there going, okay, now the price doubled because they didn't disclose that originally.
Right. Also interesting in this report, the percentage of stays 28 nights or more, that still accounts for 21% of their nights. So still, even though we're way past the pandemic point where people were working remotely in different areas, it still accounts for a very heavy percentage for those longer stays at some of these Airbnbs.
So that's what's going on with Airbnb in the travel industry as a whole. Even though you're seeing higher prices for hotels, and even though airfares continue to move higher, you're not seeing anyone backing down from traveling. The TSA throughput is back at 2019 levels now. I mean, you're back to pre-pandemic travel levels. and that's without nearly as much business travel. So even though costs are higher to travel today, still an awful lot of activity. Bloomberg makes the case that because prices are up, people are going to more affordable locations like Egypt and Morocco. I don't know anyone who's gone to Egypt and Morocco in the last year.
Doesn't mean it's not happening.
No, but I know people, and they're not going to Egypt and Morocco.
It seemed like this was written more from a UK perspective. So is that perhaps the case, that they're saying more European travel is heading that way?
I could see that. I mean, again, in Europe, going to the Greek islands is like going to Florida.
Right. It's nowhere
different.
near the same of a haul for us. But to your point before, Hilton, Marriott, are seeing all these coming up with some really strong quarters.
Quick break. Trivia answer is next.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues, such as losing control of your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide out this month titled Understanding the Secure Act 2.0. Mike, one of the big changes in the Secure Act 2.0 is that RMD ages are on the move again. What's happening with them?
They are. So this kind of slipped under the radar last second at the end of last year, so it hasn't got as much attention outside of certain circles. But previously, RMD age was 70 and a half. It got moved back a few years ago to 72. Now they're moving it again. So for those born between 1951 and 1959, your new required minimum distribution age is 73. If you were born 1960 or later, you're now moving to an age 75 for required minimum distribution, which creates a whole bunch of new opportunities that weren't previously available.
Yeah, and certainly when you look at this, it gives you the ability to adjust and manage your tax burden longer into your retirement, potentially employing things like Roth IRA conversions for additional years than previously was allowed.
It does, yeah. So Roth IRA conversions have been a big topic in financial planning for the last few years, and effectively this just gives you more flexibility when it comes to those. Other changes regarding RMDs, you used to need to take one on a Roth 401k account. They did away with that entirely. So a lot of changes in this new bill, and we cover all of them in our new guide on Secure Act 2.0.
The guide is titled Understanding the Secure Act 2.0, and there are two ways to request it. First, you can call 800-393-4001, or you can request it online at armstrongadvisory.com. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Time to pay off trivia, and our question today was in relation to YouTube, which was, what is the most viewed video on the Financial Exchange channel on YouTube? Well, that would be in relation to Foxconn and Lordstown, which has nearly 700 views now, which our channel launched back in December, I want to say. And just as a reminder, you can visit the Financial Exchange page on YouTube every day for full show recaps, interviews, and classic segments. And trivia is brought to you... the winner. Almost forgot that. Winner today was Sean in East Hartford, Connecticut, and he's taking home that Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Encore Boston Harbor, which we'll give away on Friday's show. And trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Quick piece of news that broke this morning with the New England Patriots that I think is relevant. Ticket prices going up next year.
Really?
First time in 15 years that they are doing a stadium-wide ticket price increase. So they've done different segments at different points in time, but this is the first stadium-wide increase since 2008. So inflation, might I say?
Well, they did have a bunch of renovations there, too. Keep that in mind.
They did, but they're still raising the cost for everyone. The interesting piece, though, is that they are going to be cutting the cost of parking. And not just by a little. So on the stadium side of Route 1 in the Patriots lots, pricing for parking is going to go from $80 down to $25.
Interesting.
And also on the other side of the stadium, or the other side of Route 1 rather, they are going to be making parking free.
Wow.
That to me is a clear signal that all the stuff that we sort of talk about behind the scenes when you're thinking about going to a Patriots game, it's a pain in the neck to go out to Foxborough. Route 1 traffic is brutal, and the parking is a huge...
It's smart.
Huge issue with that. So making that more affordable makes it more palatable to spend more on the tickets. That's what it signals to me.
Here's the other thing. Have either of you ever used the delayed exit lot?
No.
So you can't leave until at least 75 minutes after the game.
Oh.
So you're basically committing to, hey, I'm going to tailgate for like another hour or two after the game.
Mm-hmm.
So that lot's been free. In addition to being free now, they are going to offer a $50 Visa gift card to any vehicle that parks there.
Huh.
Wow.
So they're actually going to pay you $50 to use the delayed exit lot.
Again, to better manage the flow of traffic leaving the stadium, which everyone dreads.
Yeah.
Huh.
Interesting.
Very interesting. Very interesting. they locked a lot of people in season tickets back in the Brady years to make sure they extend further, with good reason now with the product you're going to see.
I'm on that list somewhere.
Oh, the waiting list?
The waiting list, yeah. I
don't
know where.
They were going to existing season ticket holders saying, please lock in for another 5-10 years to embrace
My guess
the
is
good
I
run.
never get off of it.
Yeah. It's got to be a long one.
How long have you been on the list?
At least 10 years.
Wow.
At least 10 years.
I figure you get a call soon.
Me?
I don't think so.
I don't know if they're ever going to. They might just not want me there. I could see that, too.
I feel like a lot
I went to one game this year.
Did you?
It's against the Bears in the rain on a Monday night. That was fun. Worst part, I went with my brother-in-law who's a Bears fan.
Oh, that's terrible. That
was
like the worst game of the year.
It was the worst in a couple different ways. The first was, so they went down early on, but then Zappy comes in, throws a couple TDs, and everyone's like, oh, like this is it, like we got it.
That was a good pop from
and
the
then
crowd,
they just
actually.
got absolutely crushed in the second half in that game. But in any case, Pat's tickets prices going up, but parking prices coming way down. Let's talk about Apple, or Apple as they're more commonly known. They are going to be getting into the buy now, pay later business, and I just wonder if this is a little bit of hubris on Apple's part, because it seems to me that anyone who gets into this business says, oh, we can do this smarter, better, and faster than anyone else, and then everyone ends up in the same place, which is, gee, we're losing a lot of money on this because we're not smarter, better, or faster than anyone else.
I agree with you. Really skeptical of the move myself. This is something that it's not a new business at all by any means. This has been tried and tested for years, and the players in the space are well versed. There's a lot of hurdles to entering this, and it does seem like Apple is a little overconfident in the way that they can address this. They'd have two different types of payment methods here. One is Apple Pay in 4, which is short-term installment payments with no interest. The other one, which I believe they would still be partnering with Goldman Sachs on the lending aspect here, would be a monthly payment that has interest attached to it for their products. But they'd also want you to integrate into their system so they could basically vet that you're good for paying things back. But easier said than done here.
Yeah, I just have seen so many companies that have tried to do this
failed.
and not done well.
The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John, and the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. Now, the entry deadline has passed, but if you entered, stay tuned because the winner will be announced on February 20th. Each island offers incredible experiences from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required, so go to visitusvi.com for more information. That's visitusvi.com.
Earlier this week, on Monday, I believe, we were talking about EV charging in the United States. And I had said that I thought that Tesla was allowing other EVs to charge at their stations, just, not necessarily at all of them. Turns out that was overseas. But Tesla is going to domestically in the United States, by the end of 2024, offer charging to non-Tesla vehicles at most of its U.S. chargers. They're still planning to open another 3,500 new and existing. They are planning to open 3,500 new and existing 250 kilowatt chargers to drivers of all kinds of EVs by the end of next year. So even if you're driving a Ford F-150 Lightning, or if you're driving a Hyundai Ioniq 6, you're going to be able to hook up to them. You will need an adapter in order to do so, just because the Tesla charger does not use the standard EV charger. They're taking, kind of the Apple approach where it's a custom charger. But I think that this is interesting because, to me, it also says, hey, Tesla thinks they can make money off of this, and they're not going to alienate their own drivers so much by having all of the spaces filled up by other vehicles.
That's interesting you make that point regarding the accessories, because that was my immediate thought is, what is in the benefit for Tesla to do this? Certainly you want the larger adoption of electric vehicles, that's to their benefit. But if you're going to be assessing an accessory fee similar to that of Apple, you get some revenue generation there. Also, it seems as if they want access into the federal funding, though Elon Musk has been skeptical that there's no need for federal funding in order to build out the network. But there's $5 billion that's up for grabs from the U.S. federal government in order to build out this countrywide electric vehicle charging network. So that likely playing into it as well.
Let's take a quick break here, and when we come back, we'll do a little bit of stack roulette.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues, such as losing control of your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're closing in on retirement, pay close attention to the new changes in the Secure Act that was previously passed in spring of 2019. This is Mike Armstrong from the Armstrong Advisory Group. The original Secure Act revised the rules that govern retirement savings, and our new guide, called Understanding the Secure Act 2.0, addresses these changes in order to help you determine how your financial situation may be impacted. One key change involves Roth 401k accounts. Beginning in 2024, RMDs are no longer required from these. The biggest benefit of a Roth account is that any growth won't be taxed, so this change could help you if you have a Roth 401k. To learn more, call our office right now at 800-393-4001 and request a copy of this new guide. That number again is 800-393-4001, or you can request a copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The entry deadline has passed, but if you entered, stay tuned, because the winner will be announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Paul, would you like to kick things off for Stack Roulette, or would you like me to do so?
I'd love to kick things off. This is about Netflix. Netflix, we've covered a lot on the show in their pursuit of live sports rights. They've backed off that largely in part due to the success. I don't know if you guys have watched the F1 show that they have. It's called Drive to Survive. That just...
I've heard it's phenomenal.
I've heard it's great, yeah.
It exploded the popularity of F1. All of a sudden, I listened to a lot of sports podcasts. They were starting to touch on F1, something to us in the United States, while globally very popular, doesn't even really measure on the radar. Now they're coming out with a golf one that is set to debut today. Is that correct? Yeah.
Yep.
And it's been something where you've got 230 million subscribers on Netflix, really gets the sport exposure to a global audience. And for F1, it's driven a lot of more interest there. You now see celebrities going to events in Miami, and merchandise sales have boosted things. So it's really a win-win from both sides. Netflix gets good content, and the sports leagues also get more eyeballs in their product.
Yeah, this golf thing's been on my calendar for a while.
You're interested?
I mean, this is the year where Live happened.
Right.
And they have it all on camera.
That's what you need. You need storylines. You need drama to make these shows go. And also, I feel on golf side of things, we often think of it as the very quiet, murmured voices on the CBS coverage of Jim Nantz and the birds chirping. But now you can get a different look into the golfers and hopefully get a little bit more of an edge to golfers, maybe opening it up to younger or other fans that are not typically following the sport.
Yeah, it is only 53 days until the Masters right now.
Right.
Put that out there. Here's a question that I have. If you could pick any one sport on planet Earth or any one league on planet Earth for Netflix to do a season-long documentary on, what sport would it be? I mean, Tucker, you might already have it with the golf one. You might be there.
I mean, golf is probably up there, but I mean, we've seen it with football, though.
No, here's the biggest thing, and I'm glad you mentioned this, Tucker, is because they have full editorial control.
Right,
Netflix does.
Not like the NFL controlling Hard Knocks or something like that.
Which is why it's not as good as it could be, the Hard Knocks piece.
Yeah.
Hard Knocks, it gets old because teams are only willing to show certain things. They don't want to tip off any advantages or make themselves seem like a circus. So that's why you don't get the full benefit of what the program could be. If you give full editorial control, that's when you get more juice, gossip, drama, all those types of things. So ideally, it would be the NFL, and people would say, gee, they have that on Amazon Prime, and they have that with Hard Knocks, but I'd like the full uncensored.
So the NFL is popular, but the F1 documentary, like no one really watched F1 in the U.S.
you're
before
saying
that. What league that maybe doesn't have exposure now do you think would just be fascinating to watch a full season documentary on?
Probably something in football, like European, right?
I would probably go English Premier League just because the drama surrounding that is just absolutely insane, and the pressure surrounding it. The other place that I was thinking, and I don't know exactly how you would do this. Well, I guess I do know how you would do this. I think an MMA-focused one would be fascinating as well. And I'm not into MMA in any way, shape, or form. I don't watch it. But I think watching like what happens over a year of MMA would be great from a documentary perspective.
I agree with you. To your point, I'm not a big boxing fan, but HBO runs, and I don't really watch them anymore, but even I would get sucked into what do they run before the big fight? They kind of they follow the two fighters leading up to it and their training and just all the back and forth there. Something like that with MMA, the behind the scenes look, to me would be something that I'd be interested in watching. I love this type of sports documentary sort of production anyway, so I'm a real sucker for any of this stuff. So if you get me that type of exposure, you get the compelling drama, makes it more interesting to follow.
The other two that I think would be sneaky good, just because at first glance you'd think they're terrible, but then you're like, oh, this has possibilities. Follow a crew team for a whole year and follow a polo team for a whole year. Because you think of them as like very polished and I bet there's all kinds of crazy stuff that goes on with who's gonna sit in this seat on this boat, and I think there'd be some fun stuff on that as well.
Yeah, it'll be interesting to see what type of numbers that they get or what type of popularity comes from the golf one. It seems like, Tuck, you'll be tuning into it, so you'll be able to give us.
Have you been watching
it
during the show?
No.
Okay.
I could if
you promise.
Just feed the audio.
I've got a leader in the clubhouse for most tone-deaf title of any article so far this year.
Okay.
All right.
To save money, maybe you should skip breakfast. That's, again, it's still a step ahead of Bloomberg last year saying, hey, if inflation's bothering you, let your pet die.
Yeah. Who published this?
This is Wall Street Journal.
Okay.
And a quote from this, breakfast lovers might be better off just having a cup of coffee, but go with roasted, not instant, because roasted coffee declined by 1.1% last month, but instant coffee rose by 3.6 monthly for the month of January.
From a dietary aspect, wouldn't lunch be much more of a better bet to skip out than breakfast?
Lunch is also more expensive.
Exactly. I mean, even with the egg bird flu
Egg prices are coming back down anyways.
They're coming back down, and it's easier to get a cheaper breakfast or put one together at your house for a cost that's much less than the lunch. Or going out to lunch, that's your biggest issue, that if you want to cut something from a spending perspective, go at that rather than breakfast.
It's a very brief article.
Yeah,
It's just kind of a waste of space, honestly.
Yeah, the actual article is much more mundane than the headline. I was really hoping they were going to go all in on it. But
who prefers instant coffee to roasted coffee, by the way? That's not a thing.
I don't know. I don't drink coffee.
Right.
You don't drink it at all?
No.
Wow.
No, he's not a coffee drinker.
Any soda or caffeine
None.
in a pinch?
It's the only reason I don't weigh 800 pounds is I don't drink any soda. And coffee, I
don't drink soda.
I never got into it.
I'm off soda too, but coffee is
essential.
I've always had the approach that if I get tired, I just kind of slow down, and if I slow down too much, I take a nap. And that's fine.
Yeah,
Is it fine?
I'm not working with power tools. I'm not driving a vehicle for my job. It's fine.
Employee productivity, people may push back on that notion a bit, unless you're making it up at some other point in time.
You know, listen, you take a couple naps a day and everything works out fine, right?
As long as you keep it outside of 10 to 12, then that's...
Wait, you take a couple naps a day?
What's that?
You take a couple naps a day?
Tuck, I napped the whole first hour of the show. You didn't notice?
Oh, that's what was going on during Ask Todd.
If you hear a bad segment from me, I've just been sleep talking a little bit. It's not a big deal. You know?
I wish power naps were more socially acceptable.
I
in the
can't
workplace.
nap. Can't nap.
Quick 15, 20
No,
minutes.
so, again, during the week, I don't actually nap, but on weekends, I like a good hour and a half nap after lunch.
It's great with our kids' age. I love just...
Yeah, you time yours. We sleep when the kid sleeps,
Exactly.
You know? It's a nice thing there. Taking a look at markets right now, we got mixed news at the moment. The Dow's still off about 0.25%, 68 points. The S&P 500 is down 2 points, and the NASDAQ now has turned positive, up 42 for the day. 10-year U.S. Treasury still selling off, though, up to 3.8%. So we are seeing that reversal continuing now. Oil West Texas Intermediate is selling off as well, down 146 a barrel to 77.60. And we've got gold selling off, too. So gold down 19.20 an ounce to 1846.20 at the moment. So the message that I'm still seeing from this is that bonds are starting to pick up the idea that the Fed may have to go higher for longer than originally anticipated, but stocks are not buying that, or if they are buying it, they're saying, okay, the increased growth is going to be enough to offset that, and we're willing to pay more for stocks compared to, you know, what we're seeing on bond prices. That was not the trade that worked in 2022. So this divergence that you're seeing here, it's interesting to me, but I do wonder how long it goes on as rates continue to rise here. That is all the time we have for the day, but the good news, it's only Wednesday. So that means we've got 2 more shows this week. Not 1, but 2, on Thursday and on Friday. We will see you tomorrow on the Financial Exchange. Have a great rest of the day.